Evening, everyone. It is 6:25, a little bit on the late side, but couldn't be helped today. This is your closing comment for this afternoon, Wednesday, the 2nd of August. Okay, this is a different chart than I've shown you before. I don't think I've ever shown you this chart. It is the 2-year Treasury note. This is part of the infamous um, 2 and 10 inversion. Um, Hard to look at this and see anything other than a severe breakdown, a breakdown to a new low, tiny little rally. What's important here is that this low actually goes back to 2006, and we're about to break that. I'll show you just for the hell of it. This is the monthly chart, I believe. Yeah, this is the monthly chart. And the low here is 101 and 40 128ths. This low is 101 and 50 128. So we haven't quite broken it to the downside, but you can see if we do, the next bottom would be here at 98 and a half approximately, and that would go back to April 2000. So 23 years. This is another monthly. This is a fairly disturbing chart to me. Um, it just shows you that the two continues to be weaker than all of the rest. When you look at things like the weekly or monthly in some of the others. For example, I did a video this afternoon on the 30 year. You don't see this. The 30 year looks like it, but not as extreme, and certainly not the kind of sell off that we've had here um, from the break right here at 110 and change in 2021, September of 2021. So, you know, there are a lot of people saying that none of this really matters and we're not going to have a recession. And, they can say whatever they want. They don't really know. Some of them don't have a clue. And 99% of them were not around 25 years ago when we had problems like this. They've never seen a bond market where prices are cratering and rates are moving up. So we'll see how it shakes out. A lot of them have also said that, oh, they downgraded. It doesn't really mean much. The downgrade is a symptom. They're trying to staunch it before it really gets out of hand. There is zero fiscal responsibility. And, both parties are in the same bed as far as this goes. The Democrats throw money at absolutely anything. The Republicans have had favored tax break for upper earnings earners. Um, and, at some point in time, the bill has to be paid, and it looks like it's coming due pretty damn soon. Okay, so with that said, the market started on the downside, got down about 400, and the Dow closed down 346, or just under 1%. Advanced declines were 3.5 to 1 down. Nasdaq was down about 360, finished down 310.47, or 2.17%. That was the biggest loser. Advanced declines there were 2.4 to 1 to the downside. And the biggest part of this is that the volume exploded to 5.5 billion. We generally, especially during the summer, don't see this kind of volume unless there's some sort of a rebalancing of the Qs or one of the other big indexes. 5.5 billion is pretty substantial. S&P was down 63 or 1.33%. The Russell was down 1.37%, down 27 and change. The transports were down 150, but they've gotten pounded worse recently, down just 0.9%. And finally, the VIX was up today 15.5%, 1609, up $2.16. Um, the oil, even with the weekly inventory number, a drawdown. They were looking for a little bit of an inflow. Instead, they had a drawdown of 17.1 million barrels. The most important thing that says to me is the administration either has absolutely no interest in buying back. To have those kind of drawdowns and, not have any buying whatsoever uh, towards that less than half full SPR is a real problem. Okay, earnings. Teva, big beat, top and bottom line, and solid guidance. It closed 829 yesterday. Today's high was 949. The low was 874, so it left a sizable gap on the way up. Closed at 922, up 93 cents or 11.3%. CVS was unbelievable today. Um, they beat top and bottom line and also gave good guidance. The stock had closed 73.95, which has been up probably $6 or $7 over the last several weeks. Got up to 75.39, and then when the market started to tank after the open, all of a sudden it was down at 72.23, and then it burst back to the upside, 76 and a half, up 255 or 3.45%, all over the place. Another one that was all over the place but is on the negative side, Qualcomm, whose numbers and stuff looked pretty good. The stock had closed 129.27, down 281, traded down to 118 and change. The last is 120 even, and that's down $12.08, or about 9.9%. Another one that was all over the place had seemingly good earnings, but nobody liked the interview uh, with Lisa Su and at AMD. They beat, looked great. Stock closed 125, or was up to 125 yesterday, last night, after the earnings came. This morning, it got down as low as 107, um, and the last was 108.70, down $8 and change. So it was up 6% and finished the day down 7.5%. 14% is a big move no matter who you are, but especially you know, close to $1 trillion, if not $1 trillion company. Okay, uh, tomorrow we have industrial production, unit labor costs, and because it's Thursday, it's claims day. We also have earnings tomorrow afternoon. I didn't go through all of tomorrow morning's. They are numerous, but the ones that everybody is looking at are after the close. We have two Dow stocks, Amgen and Apple. We have Amazon. We have Cloudflare, and we have Cirrus, all after the close. And just for those of you who didn't listen and are trading Tupperware or Yellow, Tupperware closed the day 334, down $2 or 40%, and Yellow closed the day at 293, down 97 cents or about 25%. Be sure to watch that video that I put out in the middle of the afternoon. It's on the front page. There's a link to it on the front page of tonight's Daily Note. In the morning, folks.